Hey everybody, the Disruptor here, jumping back into trade school. This is a series I did a while back where I was trying to talk about how you develop as a trader using technical analysis. Something I've always felt was really important, just helping new traders better understand how to use the tools that are available to them. And today we're going to jump into trends. Trends, I think, are the fundamentals. If you dive into anything about technical analysis, whether that's the beginning with Edwards and McGee, or even going further back to Schumacher, you're talking about trends. And I think that's a great place for us to pick up where we left off last time. If you haven't watched the other videos, don't worry about it. This is going to serve as a perfect foundation for you. So the first thing I want to say is there's this great quote that I found. It's from I guess an anonymous person. I reached out to the person who I thought had used it, who's a psychologist, and she said that she had found it before and wasn't sure. But you got to love this. I don't trust words. I even question actions, but I never doubt patterns. And when we talk about trends, we're talking about a lot about patterns. And you might have some curiosities what this means, and I'm hoping we'll break it down really fast. Basically, what anyone wants to do when it comes to using technical analysis with trends is you want to identify the trend as early as possible, right? You want to be actionable, you want to be profitable. And then once you've acted on it, you want to capitalize on it for as long as possible. You want to ride that wave for as much as you can. And then you're obviously going to manage the risk that happen along the way. And I think technical analysis and really trend analysis is a great way to get started with that. I will definitely also be the first one to tell you that trying to ride from the very bottom to the very top is something that is rarely successful. A lot of times we buy in too early, it's not a new trend, we get burned. Or we try to ride it all the way to the top, then suddenly something happens. If anyone was in DOGS, D-O-D-G, D-O-G-S, sorry, D-O-G-Z, I can spell. That's the ticker, D-O-G-Z. That thing plummeted like a knife. And I was actually in that because I was trying to maximize, capitalize on it for as long as possible, but maybe I went a little too far. So I think these three rules are really important. Identify trend as early as possible, capitalize on it for as long as possible, and manage the risk along the way. So the million-dollar question I've got here, right, is, do you believe that in a fairly traded market, prices tend to travel in trends? And when I say that, I'm not talking about things like OTC or those highly manipulated sub-pennies or anything like that. I'm talking about regular, big board stocks that aren't being manipulated. Do you believe that they prices tend to travel in trends? And another great example is GameStop or the Wall Street Bet stuff, where we saw things really radically moved, and you could argue, well, that was not fairly traded. There was a large group of people that were trying to coordinate a trade. Well, I'm talking specifically of fairly traded markets. Do they trend and travel? And if do they travel in trends? And if they do, and you believe that, then welcome to the treehouse, because that means you're well set up to be a technical analyst. So I want to break down that quote in the beginning. Why not trust words, right? So if anyone has ever been in a stock where you felt like, a catalyst, a press release is going to come out, and that's going to just launch prices, let's go, and it didn't happen, then you saw exactly why we shouldn't be trusting words, right? We shouldn't be trusting those sort of things. Ever seen the market sell the news, right? We all have. Right? I can't put my confidence in words, right? That's just something I feel very strongly about, and you probably would too if you're in the treehouse, right? So why question actions, right? Just try to think to yourself, how many houses on your street have an Amazon box sitting on the front doorstep right there, right? I mean, it's a lot, but what's the stock doing right now? It's not a stock I want to be in right now. Amazon's a great company. What they do is excellent. That doesn't mean that the company is the stock, right? It just doesn't always happen like that. I think that's a great way to think about it when you think about the actions. Just because I have an 11-year-old daughter, just because my 11-year-old daughter goes to Claire's to shop for earrings doesn't mean I want to be investing in Claire's, right? So question the actions. So that leaves us with patterns and trends. And so in this slide, we're going to jump right in. And what I did is I took a chart I've been looking at a lot lately. This is actually the percent of stocks that are above their 200-day moving average. Clearly in a downtrend, the market's suffering right now. And what I did is I took high number 1 and high number 2, and I drew a line to them, right? And notice high number 2 is below high number 1. And then the same thing with low number 1 and low number 2. Right? I drew a line from low number 1 to low number 2. Notice low number 2 is below low number 1. This makes a downward line, right? Go back to geometry, your slope, right? If you've got a negative slope, if you're going down, right, that is a downtrend. Same thing for this. Now, this is just a hypothetical generic chart, but I think this is a good one to bounce off of as well to see something more consistent, something that's not as, say, random looking as this, right? Sometimes finding the trend might be hard. Sometimes it might be incredibly easy, right? Again, I've got, instead of lower highs, I've got higher highs. I have high 1 going to high 2, low 1 going to low 2. And instead of the slope being negative, now it's positive, right? It's moving up, right? So we have an uptrend. And I've drawn those lines for you so you can kind of see exactly how you would want to do that to draw those lines. Right. So let's talk a little bit about the vocabulary when we talk about trend. So a peak is the highs on the trends, and the troughs are the lows on the trend. Right. So just something to keep in mind. You might hear people talk about the peaks or the troughs. That's all they're talking about when they do that on FinTwit or StockTwit, whatever. Right. Now, then the third option is a sideways trend. Right. And this is actually the Russell 2000 IWM, which was one of the most famous sideways trends. It lasted forever and recently broke downward. And you see I have these 3 circles, right? So the first circle is showing the preceding trend, right? The trend that went up. We had a great uptrend. Everyone made lots of money on that. Great trend. And then it just kind of bounced up and down here, right? And then the second circle, you can see where it broke above my line. And I circled that because that looked like it was breaking out to the upside, but it came back down. So we would call this a false breakout, right? It actually came back down into the channel. Usually when something's in a false breakout, there's a false breakout or a false breakdown. When it comes back in to that sideways trend, it's much more aggressive. It's violent, right? And it just shoots down to the opposite end, just like we see here. It went straight to the bottom and tried to get back up, but it just couldn't. And then boom, the third circle is the breakdown, where we're actually leaving the sideways trend, and now we've entered a downward trend, right? And so if we can go back, that downtrend is right there, right? That's what it's going to look like from there on, right? So we have our downtrend. So then you might say, okay, well, Jay, what's this thing called a trend? What is a trend? What does it actually mean? It's just price moving in a direction, right? So if price is moving up, right, great, you've got an uptrend. Price is moving down, you've got a downtrend, right? And things can move up or down very quickly. What I'm talking about are things that do it long enough so you can actually make some money off of it, right? That's the whole point. And that's when we go back to think of slope, right? So we probably wanted to do this, remember we're connecting one high to another high or one low to another low, right? So we probably want a series of these to really have a good trend identified. So, and then we get to the basic question, the action of how do you draw this trend line, right? So I'm just looking for 2 or 3 extreme highs, and then we're going to draw a line connecting them. And I'm going to do the same thing for the bottoms, just like we showed on that uptrend, where first you can see the highs, and then I dropped in the lines for you, and you can see, okay, yeah, he just simply connected these extreme highs and these extreme bottoms with one another, right? And so if you're going to ride a trend, the first thing you want to know is how do you know when the trend is changing? And so here's SPY, right? If you don't know, that's SP 500 ETF. Basically, it's just a way that we can buy the S&P 500. And so you've got here clearly an upward trend, right? I've connected my lows, connected my highs. And you can see here, we reach a point where the trend drops, right? It drops out of that trend. It has left the trend, just like in the sideways trend with IWM or the Russell 2000 that we showed you earlier, right? Now, you might notice something that I think is really important, and this is a big drawback to drawing trend lines versus what we'll talk about in another video, which is support and resistance or horizontal lines, is that here you might see one high and say, oh, it's really extreme, and then you notice right in the middle there, on my trend line, that's the points that I'm actually connecting. Right, and so you might constantly be rejudging, like second guessing my trend, like is my trend right, my trend wrong? That's something you need to worry about. What if I had redrawn that lower trend line, right, when that downtrend started? So that's why we also need to really look at support, resistance, horizontal lines, price memory. We'll get into that in another video. But I think this is a great place to start, and you can see if you'd have done that, you'd have timed that exit really well in SPY if you wouldn't have second guessed your trend, right? So why makes price move? Okay, this slide needs to be fixed. What makes price move? Right, it is simply supply and demand, right? And so you might be thinking, great, okay, so what the hell is supply and demand, right? And this is something we've learned back in econ, and I think I have a slide. I have something here. So demand, buyers want it, right? And they're going to offer a bid. So let's say we're looking at Amazon. We were talking about that earlier, right? And so I want it. I want to buy it. I offer a bid for it, right? But then someone has it. This is the supply. They're going to sell it, and they're going to sell it at an ask, right? And then price is whatever we ultimately agree on, right? And so it's ultimately a change in supply and demand. So right now there's a lot of kind of bottom fishing going on with SPY right now. Everyone's trying to figure out, have we hit a bottom with S&P 500? I personally don't have an opinion on that. I wouldn't advise you to have an opinion on that. I'd advise you to look at what price is doing. But some people are saying there is this bottom. And so they're demanding to buy it, but they want to buy it at a really low level, right? A low price. And people want to sell it, but they got burned too, so they want to sell it at a higher price, right? And so this is this tug of war between supply and demand. And ultimately, a price is agreed upon that they do, and that's going to be a change in the supply and demand, which is why that change in supply and demand is constantly moving that trend up. Remember, we believe in patterns, we trust patterns, or it's going to be moving that trend down, and that's a different pattern, right? So, and you might say, well, okay, well, let's really get to the nuts and bolts of this and say, well, what could have changed the supply-demand balance? Who cares? I mean, quite simply, who cares? Because it could be anything. Maybe Shelly sold some shares because she needed money to pay for classes in college. Maybe Tom's going to buy some of this share, because he wants to put it into his daughter's, account for college. I mean, who knows? Who cares? All we're doing is looking at price. Remember, we're not going to trust words. We're not trusting actions. We're just going to trust the pattern. So it could be any random thing, which is why CNBC can be really frustrating sometimes, because they'll be talking about something and I'll pull it up on a chart and I'll say, there's no way I'm buying that, right? So that's just something to think about. Lean to the pattern. Don't lean to the words. Don't lean to the actions. Don't try to figure it out. Just play what's in front of you. So then the question might be, well, what if I'm a day trader, right? Does trend still exist? And yes, it totally exists. And that's because it's all fractal, right? You have these really tiny little things and then these really big things, and each one of them has its own trend. Now, the trend that you see on, say, a 5-minute chart isn't going to be the exact same trend you see on maybe a daily chart. What I'm saying is that those trends all happen at different time frames, right? Again, trends exist in all time frames. You just need to determine what time frame you're interested in, what's your period of interest, right? Are you interested in quick pops, and that's your time frame, a really short time frame, or are you a long-term holder and you want to hold something for years or months? And so here's a SPY. I just took it in 4 different time frames. We got 5 minutes. Now, I'm not using candles in this video just because I really want to make it clear about the trends. I don't want to get you distracted with candles. We'll dive into candles definitely in future videos, but you can see here 4 different time frames, right? And you can see a trend. Like the 5-minute time frame, you got an uptrend, right? You can just see the low one connected to the next low, connected to the next low, right? And then look at those extreme highs, do the same. Yeah, you've got a great uptrend. The 30-minute, that looks more like a sideways trend, right? It's just kind of pinging around. It hasn't really broken out in any significant manner. And then I look at the 60-minute trend. I say, oh, okay, that's why it came down. Maybe it is trying to find a bottom, right? It's just unsure. Who knows how long it'll be in the sideways pattern that's in that 30-minute time frame. And then you got the 1 day, and the 1 day makes it look like, oh yeah, we're in here and we're out of here, right? We're heading back up. So maybe that is, but these time frames, they all matter. And a lot of times looking at other time frames can help you figure out what to do in your time frame. So for instance, if I like to trade in 30-minute time frame, I might want to look at the 60-minute, I might want to look at the 5-minute and say, okay, yeah, maybe things are looking good. I'm clearly in an uptrend. And then I might look at the 30-minute a little differently, say, you know what? Actually right there, I do see some lows, some higher lows. Maybe this is stronger than the momentum I've seen in earlier in my 30-minute. So anyway, so something to do, something to look at. We break trends down. This goes all the way back to Charles Dow, right? So if you're into Dow theory, or if you ever heard that name, he broke trends down into these 4. You've got primary trend, which is basically months to years. You've got the intermediate trend, which is months to weeks. Short-term trend, which is generally days, and intraday trend, which is generally hours to minutes. So these sort of trends, you might have a major trend going up, and then you might have a short-term or even intraday trend that goes down, right? So there's actually ways to make money on each one of those movements. And so that's it. I hope this was cool. I hope that it was helpful. And if you're interested in doing in charting some trends, send them to me. I'd love to look at them. You can email me at thedisruptorcharts@gmail.com, or you can DM me on Twitter @thedisruptor. I'd love to see you draw trend lines. That'd be awesome. Like, it'd be great to do that. It'd be great to make some new friends, and we can chat about that all you want. But I'll leave the email and the Twitter handle in the comments. But most importantly, hope this was helpful, and start drawing trend lines. Cheers.